Well, for the 32nd time this year, this morning I'm here to tell you, US share markets hit an all-time high. The S&P 500 cracking through the 6,700 mark and maintaining the upward momentum that is driving not just US shares, but shares around the globe higher. Another great night for those magnificent 7 tech stocks and tech stocks generally, with the semiconductors leading the way, but also some good performances from Tesla, up more than 3%. Oracle, up a similar amount. It wasn't all good news. Meta shares were down 2.3%, but overall it was a very positive night's trading, although the gains were modest. They were widespread. The drug sector was one of the major beneficiaries. It appears that the deal that Pfizer has announced with the US government might be spreading across the sector. And that was certainly the way it looked in trading overnight, as pharmaceutical stocks got a huge boost on news over the deal. Now, they have been under pressure. It was widely flagged that this new administration would look to cut costs for American consumers when it came to pharmaceuticals, and that was likely to pressure margins. With the establishment of a government sales channel, Pfizer shares have recovered from those very low points, and we've seen some very strong gains across the sector. The drug sector in the US is worth $3.3 trillion at current market. That sector, at $3.3 trillion, increased by 5.6% in overnight trading around this deal. So it's obviously seen as very important by US investors for the sector. And given the low levels of many of the share prices in the sector and the unstretched PEs, there is certainly a value argument in the pharmaceutical sector in the US, as well as a turnaround story. So one to be checking out. One of the big stories out of yesterday's trading, though, was the huge slide in lithium stocks. Australia is overexposed to lithium. It was one of the reasons why we saw the Australian market underperform yesterday. The news came from China, was that the largest mine in the world was about to reopen. As you might recall, it was shut a couple of months ago and was expected to remain shut for the rest of the year. But it looks like an early reopening has rattled the lithium markets and lithium stock prices with it. One of the areas of interest for traders at the moment, of course, is the cryptocurrencies. We've seen a very steep rally over the last few trading sessions since Friday. Bitcoin now trading back over 118,000, having had a dip below 110,000. It's recovered very rapidly, and we've got an uptrend in place. Even Ethereum now over US 4,300, also looking strong. Interesting to note, Solana and Ripple have not rallied as hard and are not near their highs, whereas it does look like the momentum in Bitcoin will see it test that all-time high at above 124,000 US dollars a coin. So seeing very positive momentum across the sector. Solana and Ripple might be playing, or XRP as it's known by its code, might be about to play some catch-up within the rally that we're looking at. We're also seeing reports of very strong inflows into crypto ETFs. Some seeing that as a safer way to play the cryptos using a listed instrument like an ETF. And of course, all of those cryptocurrency exposed stocks also doing very well at the moment. Coinbase and Strategy both going strongly, big gains there, remembering the leverage that they have to Bitcoin. In particular, the big increases are multiplied when it comes to the holdings inside companies like Strategy. So we're seeing a real strength across the sector in cryptos at the moment, very positive momentum and the potential for test of all-time highs very soon. We did hear some argument around the idea that the gold rally is holding cryptos back. I would argue that's not the case at all. And the reason we're seeing big rallies, not just in cryptocurrencies, but in gold, in shares, in bonds. So across the asset classes is liquidity. And so the rallies are actually occurring in parallel. Now, this goes against the idea of the economic and investment cycle that so many of us were taught back in economics classes. But the huge liquidity is apparently the driver of a lot of the gains we're seeing across asset classes. And I would argue that if gold starts to fall, it might be worth looking very closely at crypto holdings in case it is a response to declining liquidity. Anyway, that's one for the traders to argue with in late night strategy sessions. And speaking of strategy, the stock with code MSTR was up 5% yesterday. Strategy is a big holder of Bitcoin, widely thought to be the biggest corporate holder of cryptocurrencies. We did see some news on cryptos out of the US. It's been confirmed that unrealized gains in crypto will be exempt from capital gains tax. That brings it into line with a lot of other asset classes. The strategy stock itself is up 110% over the last 12 months. A number of analysts, once we look on the Moomoo platform, have got strong buy ratings on it. So plenty of positive momentum with those gains in Bitcoin in strategy, the stock. Looking at the drug manufacturers, Eli Lilly is a case in point and the second member of our watch list today. It gained more than 8% in trading yesterday. We've seen a very steep rally since Friday. It does appear that there was some suspicion that a deal might be struck with the government around pharmaceuticals. Eli Lilly is in government talks over tariffs and the payoff for pharmaceutical companies in getting involved with the government in what is margin crushing activity to get pharmaceutical prices lower is that they will be exempt from tariffs, and that's apparently the trade-off that has tempted groups like Pfizer into a formal deal with the government, and is apparently what Eli Lilly are speaking with the government about at the moment. It also has a very strong product suite offering. Eli Lilly is the leader in weight loss drugs. These are a huge category now and growing very rapidly. So Eli Lilly are looking much better than it has been and coming from very low levels. Current PE on a trailing 12-month basis is less than 15 times. And that compares very well with, say, the NASDAQ PE, which is closer to 28 or 30 times. So one to watch out for, Eli Lilly and the whole pharmaceutical sector under the microscope at the moment. And coming closer to home, or I guess staying global as well, looking at BHP over the last 36 hours, it has really been affected by reports out of China that the central buying authority there was instructing purchasers of iron ore to hold off, to pause their buying from BHP while negotiations continued. Now, the initial reaction to this was very negative. It actually occurred after the Australian close on Tuesday afternoon, but BHP trades globally, and so at the London opening of BHP's share price, we saw a 5% fall as markets reacted to this news. However, once analysts had had a chance to have a look at the news and work through the implications, we saw a rally back in BHP shares. And the reason for that was many saw this as a negotiating stance. It was also pointed out that in China, with the national holidays starting this week, many of the buyers of iron ore had already stockpiled ahead of the break, knowing that they wouldn't be importing over the holiday period. And so the action pause has very little material effect on either BHP or stockpiles in China. And for that reason, it was seen as a straight out negotiating tactic and nothing to be concerned about. And we've seen a bounce back in BHP's share price. Now, it has been negatively affected. This is not nothing, but it's not a company threatening situation. It's a negotiation over one aspect of their iron ore trade with China. We did see a 2.5% fall in Australian trading following the news as investors recalibrated their expectations, but nowhere near as concerning as it first looked, and BHP's pullback might be an opportunity for investors.